Welcome, everyone. I'm Andy Campbell from Tractor Zoom. Today I'm discussing the used farm equipment market update and especially changes in the ag economy that we're seeing here in the summer of 2025. I wanted to take a brief step back into history and show you my grandfather's equipment book. This was from 1923, and you can see in here a list of things that he hand wrote out and what it costs for a disc, $45. Much different than what we're seeing today with the price of equipment, and also the methodology in which we're finding out the values of our pieces of equipment. Considering it's a growing segment of the farmer's balance sheet, it's important to track, and it's highly volatile. Unlike land, this can fluctuate in a matter of 10% from quarter to quarter, and quickly cause some issues if that risk is not kept under check. So again, like I said, my name is Andy Campbell, Director of Insights here at Tractor Zoom. I also have the privilege of continuing our family farming operation up in northern Iowa. And so with that privilege sometimes comes dirty work too, like fixing tile. And if you're not aware of what Tractor Zoom is, what Tractor Zoom does, we have a suite of solutions with TractorZoom.com starting things off. It is the one-stop shop for farmers to find what they need online. It's an aggregation of farm equipment from auctions as well as dealer listings all across the country. Makes it easy for them to get what they need. Then in turn, we're able to take that data and provide it out for dealerships, lenders, insurance agencies, anybody that needs to know the value, supply, and the direction of the market so they can stay on top of the changes. Considering how volatile the market is, this piece has been key. And then about a year and a half, we expanded out and brought in Anvil Pro to our solution. This is a dealer intelligence platform that allows people to sell faster, dealerships to sell faster through efficiency and sales enablement and a dealer intelligence platform. So this is what the tools actually look like and how fast we've grown and how many different partners we get to work with. It's been fantastic, and you can kind of see here that there's a lot of the industry's top leading partners that have chosen to work with Tractor Zoom. So what I want to cover today is the ag economy and the equipment update, and I'm going to spend a lot more time on this beginning section of what really matters for ag equipment, the macroeconomic factors that are driving the ag industry and the effect that that has on equipment, and also conversations that we're having with farmers and how those conversations with farmers influence the dealers, and then the impact that that has on equipment manufacturers. But out of this entire presentation, the one thing I want you to take away is equipment goes where cash flows. If farmers aren't making cash, they're not going to be able to buy equipment. It sounds simplistic, but when you're trying to understand a very complex industry with different seasonal buying patterns and a lot of different influences on the input costs, to simplify it down is, are they making money, and is it enough to expand out into equipment purchases? The next thing is that you can't, at least continue, to sell new equipment without selling through the old. You can't just simply sell equipment to the first buyer and then wait for another first buyer to come in and fill that spot. That's not how the ag economy in the United States is tiered. And so you have those first buyers who will buy new equipment right from the OEM, right from the manufacturer. Then, because it is so capitally intensive, you have to trade those new pieces of equipment off so you have enough capital to go buy another new piece of equipment. That piece of equipment that you traded off has to be absorbed by somebody, by another farmer who is tiered likely just slightly smaller than you are, and they have to go through that same process. Once they buy that once used piece of equipment, they have to then trade that off to the next buyer in order to buy again, and then that has to cascade down. That system starts to break apart if any one of those farmers on that chain, for whatever reason, decide not to buy, and that's one of the issues that we're running into today. And then finally, auction values tend to be a leading indicator for a lot of different things. We use them especially for valuations and change in farmer sentiment and the values that the farmers may be willing to pay, even for retail. It shows that change of sentiment. And if you pay attention to the hours and the class and the categories of equipment, you can start to segment which segment of farmers are maybe feeling the best or the worst financial pain. And then what else can it predict? Well, here you can see row crop tractor auction values help predict and at least correlate tightly with net farm income. Maybe with a 2025 on the far right-hand side of the graph being divergent from where the row crop tractor auction market is right now. We'll see if that changes by the end of the year when that 2025 number no longer becomes a projection, but an actuality. Okay, on the high level ag economic factors, if you break this down to Malcolm Gladwell's book on blank and his concept of thin slicing or just simply the Pareto principle, there's a few things that make a massive difference in ag equipment values, and corn is one of those things, or it is the one thing that makes the most difference. And the corn market is making a poor difference right now. We had values as low as 404 according to the September futures chart on your screen. I believe this morning it was down to 420, well below the cost of production and break-even point. And why is that? Well, part of it is because we planted a lot of corn this year. We've gone up 95.3. I think it was actually just adjusted to 95.2 in the latest USDA report. But that is a lot of corn, especially if we're going to be expected to produce at trendline levels, which put it at 181 bushels per acre this year. 181 bushels per acre is a lot. It would be a record amount of bushels per acre, but that's also just at trendline. You don't have to look that far back in 2013 to 2017 when we produced well above trendline. And if we're able to do that this year, simply a 2% or a 5% above trendline would start to equal values in the mid 180s to 190. And that is a significant amount of corn that our domestic demand won't be able to handle, even though we are at a relatively low stocks to use ratio right now. And then going from that macro level down to the very micro, conversations I've been able to have with farmers here recently, a smaller and a large medium to a larger farmer here in the Midwest. You know, from the smaller farmer in Travis, trim the excess fat. They've got to get the house in order. They've got to be able to survive to the next good time. Brock, a moderate to medium-sized larger farmer, if the terms are right on the farm, then he's looking to upgrade certain pieces of equipment, upgrade to a used piece, not buy new. And then even Tony with a larger farm, still not looking to buy new, but maybe a once used piece coming from a dealership or coming from a jockey, and still scrutinizing things. Will buy, but scrutinizing which one makes the most sense, where that scrutiny may not have been there in years past. And really, the farmers are asking us this, like the dealerships are asking the big question of how do they reconcile a 50% price increase from pre-COVID levels, but yet farm income and corn prices are all the way down at 2015 levels, where, you know, a lot of the used prices are now being forced down to. That is a massive price gap that somebody is having to hold that risk. And right now, a lot of that risk is landing on dealership lots. And to add a little bit more, flame to the fire, if farmers can choose on certain inputs of what to pull back on, machinery is ranked as one of the highest, most elastic goods, where they've upgraded in the past couple of years. They've forward bought. They have certain pieces of machinery that can last a little bit longer, maybe with just slight maintenance and slight repairs. And so they can prolong those large machinery cost decisions and purchases for longer, certainly longer than they can fertilizer and absolutely fungicide and prices. And again, getting back to the thin slicing and the Pareto principle, when you're looking at the overall healthy industry, you can focus on many different pieces of equipment, and all different pieces of equipment matter in some areas. But in general, in whole, there are about 4 major categories of equipment. Tractors obviously being the largest, and a lot is lumped into that tractor category. But you can see here, anywhere from a compact to a high horsepower tractor, that category occupies about 40% of the cost on dealership lots. Combines will sit around 20% of the cost on dealership lots. Sprayers somewhere around 10 to 15%. And then harvest equipment. Again, depending on where you're at, that harvest equipment can vary greatly. But that, again, in general, adds about 10 to 15% of the overall inventory cost. And knowing that, then, we just had a large webinar with a lot of boots on the ground folks all across the country, used equipment managers, dealer principals. And when we asked what categories of used equipment are you most concerned about, it follows a similar pattern to what we just saw in terms of what's sitting on their lot, with the exception that combines are the most concerning. It is the time to be concerned about combines, but also because they're so seasonal, they'll only sell 2 to 3 times a year. If you miss that window, you're going to be sitting on that high cost machine for quite a while. Sprayers, also seasonal. That's why they're up there. Four-wheel drive, high horsepower tractors have increased in the concern category quite a bit recently, but we're still seeing that supply surge across the country, and that surging supply is a major concern. And so what are dealerships going to do? We asked this question to them in that same webinar. If they only had to focus on one area, what area of focus are they going to work to improve on in the rest of 25 and the rest of 20 into 26? And that's used equipment sales. 50%, over 50% said they're going to focus on selling more new. We have about an even split roughly with increasing efficiency, selling more new, or increasing the absorption, the parts and service sale. But selling used, that's where the lion's share of the attention is going.